With that said, let's go ahead and chop up the Euro USD. We're going to do the 15-minute chart because we've already talked about our macro perspective that we do generally want to look for some upside potential. But when you scope in on lower time frames, our principles just apply equally as well on a fractal nature. And you are going to see today how it applies on a much more microscopic level. I'm literally going to break that down for you. We're going to see what opportunities might present themselves, maybe London Open or throughout the week, and how the hell we're going to make some fucking money. Let's close the week strong, guys, because at the end of the day, it's not that complicated. So, all right, first step. Does anybody want to walk me through what is the first thing that we deploy when we analyze a clean chart? First thing. Round numbers, man. Horizontal levels, round numbers. Can you articulate to me why that is, Cameron?
Price moves at round numbers. Institutions place trades at round numbers.
You fucking savage.
Yeah, that's it's a point of how can I put it? It's just where the big orders will come in because all institutions use them. So when you get in one or two orders, they're huge anyway. But you're not only getting those one or two orders because all the institutions look at the round numbers. As turning points, as places of accumulation, distribution. Yeah, pretty much.
Exactly. They're using them to fulfill orders. The retail trader they also transact at these levels. But most importantly, this is what most people don't understand as well. This is why round number is important. For the big institutions, smart money hedge funds, they are entrusted, and I put that in quotes because these guys have been known to fuck up everything. They are entrusted to move. The markets are so heavily manipulated to the fucking penny. They have to move the markets in certain increments for them not to fuck up the world economy. So as we talked about, from round number to round number, this is about 100 pips of increment. Look at that. About 100 pips of increment. So that is the average daily range of most currency pairs. The euro will generally move on slow days about 50 to 100 pips. On good days, 50 to 250 pips. It all depends, man. But they have to keep it within the vicinity of these increments of movements. So from round number to round number, it's about 100 pips. And then our minor levels, which are at the 50s, are about 50 pips of increment. So they work within these blocks. So the next thing that we deploy are the next type of levels. They're called minor levels. So we deploy minor levels. And where do we deploy those at? I know I just gave it a 50s. So let's see. And you might want to just dash that up, change it up. So it's not, you can reference it right away. You know exactly what it is. And we got the 50 right here. Boom. All right, that's all we need for now. Remember, you guys don't need to confuse yourselves by like marking up all these fucking levels. Just mark up the ones that are relevant to the current price action that has already unfolded and to where the price action is currently unfolding. So give me 1 second. Now that we got that, what is the next tool that we deploy? Retail traders love to use this tool.
ATR.
No, close, but no. Starts with the T.
Oh, trend lines.
Yes, sir. Exactly. Trend line. So just try to spot a place where you could deploy a trend line. Let's see. This one looks pretty good from here. I come to think of it, you can't really deploy a fucking good one. We'll work from here. There we go. This one looks decent. And now we could start to reference where they're likely to make decisions, where they've made their decisions, where they've possibly been manipulated, and try to get this as accurate as you possibly can. We've talked about this, man. Our core tenets, live by it, memorize it, die by it. Effectiveness, efficiency, accuracy, and precision. This is how you make or lose money. So take everything serious about it, man. Even if it takes you an hour to make sure that you get the precision of this trend line on where you want it, fucking do it, okay? Because it, like Cris has mentioned, when he first started off the trade, And he would send me his charts. I would tell him, maybe you might want to move that up there. Maybe you want to adjust that here. And it's made all the difference in his trading. It's those little tiny adjustments that make all the difference in your trading. So there we go. We spotted a nice little trend line. Now you're starting to slowly see the market's painting a picture for you. Next thing that we deploy, we got our round numbers, our minor levels, our significant levels, our minor levels, our trend line. What's the next thing that we deploy? Starts with the Z.
Zones.
Zones. Yes, this begins to help us with our order flow analysis. Just try to encapsulate as much as you can, but I like to get them at the extreme points of the wicks. I don't really care so much about the bodies. If you want to capture the bodies, be my guest. It doesn't fucking matter. It's about what floats your boat. But I want these contact points. I want to encapsulate the height of that and the high point of this. I mean, shit, if you want to drag it out as well, you can drag it out. It doesn't really matter. I just like my stuff nice, clean, precise, and accurate so I can make some effective decisions. There we go. That's all you need. And then the reason we deploy our zones is to give us a better idea of where level traders might be stepping in, what levels are actually going to be paid attention to, and, you know, to see where the order flow is building up, the liquidity is building up, where the money is still residing. There we go. Sure, you could try to capture that wick down there, but that's going to be a nasty looking zone. I don't want, as I said, I like my zones nice, clean, and precise. If it really bugs you, sure, you can have it down there, but to me, that this does justice. We know this is a stop hunt right here. Because think about it. I mean, sure, you could say that there's, even if you had your zone right here, you could say, yeah, maybe there's liquidity down there from buyers, but you'll know much more accurately if you don't encapsulate that. You'll be like, we know buyers probably took that trade. And we know buyers took that trade because I know we didn't take, wait, did we take that trade, Chris?
Not the buy. We were on the short. So I took the short right before that right there. So.
Gotcha. So mark up where the fucking liquidity is. Mark it up. You could do a brush. You could highlight it like that. We know buyers are still in profit here. We know sellers are still in profit here. Why? Because these levels have not been cleaned out.
Yeah. If anything, Dave, there's like a pocket on the left that there's liquidity as well. I don't know if you see that supply.
Oh yeah, dude. I see it
there.
Here. I mean, right here.
Oh, a little lower actually. I was thinking about that pocket right there.
That
pocket right there.
Hell yeah, boom. You can count this as a level 2. I mean, shit, if you want, mark that up. We're not. I know Leon is big on like supply and demand zones. We're not so big on it, but we do identify them because we are important. It's these little tiny pullbacks, bro. It's that little tiny pullback where you get that congestion and then boom, it moves in one way or the other. That's very significant. Why is it significant? Because the amount of orders and volume that came in at that specific moment in time lets you know something. So the fact that it went to the downside, we have to consider it supply. If it goes to the upside, you can consider it demand. But that is going to be a reference point as well. We know liquidity is residing there. Now we're starting to get a slower picture, a much more accurate picture. We got a nice level here. We know sellers are still in profit here because that pool of liquidity has not been invalidated. We didn't get that deep excursion as well as to the downside. Now, this is where most traders struggle. They have everything, all their things deployed, all their tools deployed. They're like, okay, well, which way do I take it? They have no process to indicate that. The two things that we have going for us that makes our method so powerful is that A, we're very good at identifying where the liquidity is, who's still in profit, who's been manipulated. And second, in order to give us the direction, we have a method, we have process to that. Now let's identify, we've already identified where traders are still profitable, where the pool of liquidity is, but where do we take the trade? Let's go ahead and have our method down. This is where our method comes into place. Break of structure, boom, at the highs. There was failure at the 1.20 level. This right here is a massive clue. Why the fuck didn't it continue going to the upside? You don't need to know that. You just need to know that it didn't go to the upside. You, as a retail trader, are not going to have access to that information. Who fucking cares? Stop popping brain vessels trying to figure this information out. We, as specialists in technical analysis, we just need to identify those footprints. It pulled up to a round number. We transact at round numbers. Why didn't it continue going up? Who knows? But it failed. This is important. Then we had our impulsive move. So why is the breakup structure important to us? Can somebody explain that to me?
Gives you some idea of which direction the price is going, right?
Exactly.
Breaker structure, because if you haven't got a breaker structure, then nothing's telling you that that it's going in that direction. It's still in a range, or it's still accumulating or distributing.
Or in the trend, you're about to say it. There's
Yeah,
just a
he was
change in
about.
sentiment.
Yeah, it's a
Yeah,
change
on
in
the
sentiment.
trend.
A breakup structure indicates to us that perhaps a high of the day, a week of the a week or month has been put in. A higher low point of the day, week, month has been put in, and perhaps we're just going to get a shift in sentiment or a temporary shift in trend, or it could be a permanent. Nobody fucking knows, but that's what a breakup structure indicates to us. That there may be a potential trend reversal, and it could be brief, temporary, or it could be permanent. It doesn't matter. The point is, once you identify, you at least have an idea of where you should be playing the market. Then the impulse move. Why is that important to us? It gives us two ideas of what?
Direction.
Boom, direction. It gives us an idea of direction, and then what? That traders are doing what?
Retail traders are.
You got it.
Hang on. Short traders are collecting liquidity from the previous up move. So that's increasing the speed and increasing the.
You're so close. You're on the money. You just kind of like a little off.
Yeah, you got.
But you have the right idea.
Yeah, it gives us direction, and it's letting us know that traders are doing what? You're close, bro. It starts with the C. They are
cashing in, cashing out,
chasing the move. Yeah, they are chasing moves. This is why when you get those breakup structures, is because when buyers were getting in this case, mind you, at some point in time, buyers believed that this was still in an uptrend. So they were taking longs for whatever reason that they were taking longs. But when they get that massive shift in sentiment, everybody starts flipping their positions, their biases, the trend maybe has shifted. Everybody starts chasing, and that's why you get those massive volatile moves in one way or the other. So, and most of these traders, they just start taking trades on a whim. They don't wait for the stuff that we wait for. That's why I always tell you guys, don't chase a move, because you've never missed a trade. Like, you can't make a logical decision when the market has already fucking moved. Like, you can't. You have no entry criteria. You don't know where to place your stops. You don't know where to really take profits because the market is moving in real time. It's very difficult to make some very intelligent decisions. But what have we discussed several times in our group here? Price behavior is so predictable. It only does one of two things. Could you explain that to me, Ken? It will do what?
Go up or down.
Okay, yeah, it will move. It will go up or down, and then it will do what after an extensive move?
Accumulate, distribute.
Accumulate, distribute, range, consolidate, exhaust itself, whatever the fuck you want to call it. The point is that the markets will move, and then they will start to consolidate. So more orders can get fulfilled. So it'll give traders a chance to break even. So big institutions can deploy more orders. You have this, man. I'm so glad you're doing your homework. I know you're doing this shit right. So we don't try to catch the moves when it's already happening. We wait for the markets to exhaust themselves. This is why we have a high strike rate, because we're not behaving like the rest of the fucking retail space. We're being slightly more patient than the next guy. That's our edge right there. It's not easy, but the fact that we're being slightly more patient is what gives us our edge. So now with our breakup structure, let's keep checking off the criteria. What's the next thing that we look for? We got our breakup structure, our impulsive move. We have an idea of where we should be playing the market. Our zones are deployed. What's the next thing that we confirm?
A confirmed range. So
yes.
You need your 2 touches on the range to make sure that you have a range that's confirmed. Yeah.
Boom, bro. Boom. So 1, 2, 3. After 2, we're good. But if it makes you sleep at night, count all the fucking contact points. It doesn't matter. But this range is confirmed from a resistance standpoint. Now we need to confirm support. 1, 2, damn. Now we got to confirm range. Now we have an indication of where we want to be transacting when those opportunities present themselves. So now that we got to confirm range, we know that sellers are profitable here. We know that buyers are profitable here. We know that the move is in a downtrend, so we want to look for short plays. We want to look for short plays, but remember, we might be in an accumulation zone. So we want, over the long term, we want to look for a long. But don't yourself just yet. Let's keep things simple. We want a short. We want a fucking short. Now, given that idea, this is where the level of pristine skill is going to come in. Let's go. How can we look for a short-term opportunity? This is the level of precision that you're going to need. Look at this. Microscopic level, baby. Boom. Break of structure. Impulse move. Confirmed range.
You see, let me stop you there, Dave. Why didn't you go for the previous swing high? What made you just go for that one there? Why didn't you just go for the other one that's at the top of the bottom of the top zone?
You could do that too, man. That's absolutely fine. But to me,
but what I'm asking is, what made your eyes land on this one here?
Once again, man, I know this is gonna bug you. Skill, time, and experience. Skill. You could make the argument that this one is, that is where the break of structure initially started, and you're absolutely right. And then this is right here, a form of liquidity manipulation. Any sellers that took that trade, because you can see from right here, from this trend line, bro, you got boom, content. You confirm trend lines with the same criteria. 1-2 tests. When you got that false break, buyers
like
were
manipulation in itself, isn't it?
Yep. It's a manipulation in and of itself. Remember, we're just picking up clues. We're just picking up clues before we act. So we know that the move is still down. Buyers were cleaned out. Sellers that were taking trades right here at this side of the range were also cleaned out. And it never looks perfect, bro. You just have to train your eye. And once again, that's going to come from time, skill, and experience. But bottom line, the reason I chose this one is because this shit already unfolded. It's irrelevant to me now. I mean, sure, you can use it to your benefit, but it already happened. Like, I need to use information now that's going to help me make a better decision. So I know that sellers were manipulated. Buyers were fucked up. They took that false breakout. Mind you, I already know what level of skill you have. Like when I ask traders, what kind of trader you are, and they say, oh yeah, I'm a trend trader or a breakout trader. I already know you ain't making bug money, bro. I already know. Just because of how statistically low that outcome of being a trader is. Like, I just know, man. Because 80%, if you do your fucking homework, over 80% of breakouts fail. You're getting that time and time again. That is a perfect example of one. And you're gonna see a lot of our setups, when they break out, they also fail. That's why we fade strength and we buy into weakness. But that's a conversation for another day. Let's just focus on our setup in this example. So to me, just use information that is going to help you make a much more intelligent decision, Cameron. If you want to use this price action to guide your decision making, be my fucking guest. I don't care. But for me, this is irrelevant because I see a break of structure here, and I don't want you guys just applying breaks of structures everywhere. Like, oh, this is a break of structure. No, focus on the ones that are irrelevant to you, and the ones that make the most sense. Because if you're just like applying our tools everywhere, you're going to see your edge erode. It doesn't help you in any way, shape, or form. But over time, as your level of experience, as you gain more experience, you'll be able to nut this stuff out. So there we go. We got a break of structure here. Impulse move, confirmed range. Stop hunt right here. We know sellers who took this stop hunt are profitable. So that might be relevant. We know there's liquidity there. But here's the thing, man. We can't do much with this trade because the move already happened. We missed this fucking trade, but that's okay. Now we break the order flow from a much more microscopic level. So we know the move is down from a macro standpoint and from a micro standpoint. How could we exploit this? This is where you have to start anticipating scenarios. So this can unfold in so many ways, but bottom line, we know the trend is down. We have our direction. We know how we want to play the thing. Now we just anticipate scenarios and we know where to target. If the move is going down, we know it's going to clean out these buyers. It just fucking has to clean out these buyers. Where else is the fucking market going to move? Where else is it going to move? The markets will always go where the liquidity is. So we know that buyers are still profitable there. So we generally want to target these low points or maybe slightly past those low points. how can we play this? Well, if London session comes in, we know sellers are still profitable. If we get something like this, that will be our entry trigger. If we don't get that, what we've also noticed is that price will break that low, come back. Some form of price action like this will be our entry trigger. Or if that just doesn't happen and this shit completely tanks, just wait for our long setup, because we are expecting a long play on the euro. So once those lows are cleaned out, we want to take this to the long side.
Yeah.
And there you go. And then run it past these highs, and the process repeats itself. But we'll just, and here's the thing. It might just breach that. It might clean out these sellers, and then it could completely continue to tank from a macro standpoint, because the trend is down from a macro standpoint. But if it doesn't do that, you just keep looking for long plays, long continuation plays. And they will look like this. The range will confirm. You take your stop hunts to the upside, and you could probably run it where there's liquidity. We know that is a major swing point, so it might come out and clean out that high point. Hell, it might even breach lower. There is another pivot right there. Be careful. It might just come back down. Maybe we could run the trade even further. Maybe we may not even get our accumulation zone there. Maybe we just might get sellers continuing to take that breakdown, and we might get a trigger like that. All these scenarios can happen. The thing is, you just have to prepare for one of those scenarios and take advantage of it. So here's the thing. This is the playbook for the week. If we get any opportunity within the vicinity of this price action, we're going to act. If this shit continues to tank, no trade. Just let things unfold until we see something we could take advantage of. Don't chase shit. Don't feel like you missed anything out. And if the move looks good to take it to the long side, we will take it to the long side. If it doesn't, we will wait until something can occur for us to take it to the downside. So when price starts approaching this, then we will see how it unfolds, and then we will make an intelligent decision. But for right now, it's not there. Just be patient. But we want to play this to the downside. That's the key thing for the week. There is liquidity as well from here. Buyers are still profitable here. So it might, if the move continues down, we might just get dragged down past those lows. And hell, it might even just come into one of our minor levels around the 17,500. Scenario casting, man. This is where your true skill is going to come in as a trader. Maybe we might get the accumulation zone right here. And then boom, spring up, clean out all the fucking sellers from that extensive trend. And then we go from there. So we also have a very accurate level down here. Give me a second. Rinse and repeat over and over again, guys. So we might get an accumulation zone down there. So maybe if we do get a trade set up, we have a good idea of how long we can hold the trade. Once our first target is made, remember, on trend continuation plays, we take two positions. We take profit at the midpoint. Once our first target is made, we break even and then look to run it. We try to run the second position as far as we can to where we think it is likely to go. So it wouldn't be a bad idea. Like, for example, say we get an opportunity where traders get cleaned out, London open right here. We would take profit at the midpoint, or because we expect more downside, fuck the midpoint. Just take your first target here at the low of the range. Try to, if there's failure up here, you might want to give your stop loss maybe a couple ticks of breathing room. Maybe even right around that structure. Take your first target here, and then look to take your second target there. Or if you want to let your nuts hang on this one, you could take it slightly below that. You could probably take your first target right here at the 1.17800. And then we will look to see what happens right underneath anywhere around the 1.17500. But that's it, man. That's literally it. That's how you engage in your process as a technical analyst. Based off all the criteria that we checked off, we now know how we want to play the euro. We have direction. All the complexity of, oh, what should I do, this and that, that has been eradicated. From here, the complex element that goes into this is just planning out for those scenarios and figuring out which scenario you're going to take and how you're going to manage that at that. But the whole process of where you should play it has been eradicated. That's where most traders struggle. So with that said, do you guys have any questions in what we just covered? Anything that Chris and I could clarify?
I can say that just out of that, I grasped a little bit more. Each time I speak to you guys and get on a video, I grasp a little bit. Might be only a little bit, but it's enough to get me going further. What I grasp from here is, so you can determine your direction by your trend line. You can make it as simple as you like, because I look at my chart, the chart from that room there, the high quality setups. I look at that chart and I think there's so much criteria on there to understand. I understand a lot more of it now, but when you look at what you've just done here, it simplifies it a hell of a lot, because it's not as complicated as that chart looks. When I'm looking at this now, it's more just a break of structure. It's an impulsive move in whichever direction. It's when price exhausts itself and starts consolidating and creates that confirmed range. Basically, it's a trap and a manipulation in any direction you want to go, because the zone now is your profit target. The mid zone is your first profit target. The end of the zone is your close, where you're going to close most of the time. Whether you go up or down in that range, it doesn't really matter, as long as you're going off. You've had your entry trees, you've had your trap traders, you've had your manipulation. It can go to halfway up to the other side of the range. It doesn't have to go sort of fully. If you're unsure of the direction, it doesn't have to go fully. You can take your profits halfway. But then if you are sure of the direction, like you guys are with euro, and like with me, my fundamental analysis on euro is fucking up the wall, because the fundamentals are saying it's weak. The risk off environment, the macro risk off environment is saying it's weak. News flows are saying it's strong, and then the news flows recently are saying it's weak. So which fucking way is it going? That's what I mean, what you've just done there with the trend line is easier to get a bias, an inkling of the direction, because you don't have to get the direction perfect. You just have to have an idea, and then you trade that way. And then if things aren't working out, then you've obviously got the direction wrong, in some way.
And the thing is with fundamental analysis too, man. When you're an intraday trader, it becomes less relevant. It is important to have from a macro view, but I feel like that confuses a lot of traders, because they're trying to just take so much information from so many angles, and then they don't know how to fucking trade. With me, notice how I didn't even bring up any fundamentals in this training, and we already know how we're going to take advantage of the euro. Yes, fundamentals are important. I'm not saying that they're not. They're good from a macro geopolitical standpoint. So you at least can gauge major trends and how you want to play those trends. But all of our analysis was done on a 15 fucking minute chart, bro. And you've seen how many times we've made money from just focusing on our process and really just eradicating all the noise and just doing what we do best.
Yeah, I do think having a macro perspective is kind of tough, because you're just trying to overthink something that you have no idea when that's bound to happen. Like we have no idea. So we take what we have available to us now and find ways to extract money from the market from what it's giving us now. Because in all honesty, me and Dave don't give a fuck what happens with the euro or the US dollar. We in all honesty, we all think it's all gonna go to shit, but we can not everything goes, happens in a straight line. There's going to be moments that we can take the opposite of the macro view, and you always see us making money, Cam, on both ways. We literally sometimes we're flipping positions on the same pair within the same day.
Yeah, mate. So And that's really all you need, dude. As long as you understand what you're looking at, you're able to decipher the language of what the markets are trying to communicate to you, because every time you look at a price chart, it's leaving a breadcrumb of fucking clues for you.
Yeah.
And then people don't know how to assimilate that information to make some good decisions, to make some accurate decisions as a trader. Chris and I, we don't have a crystal ball, but we're just good at trying to decipher what the markets are trying to communicate. And then we just act. And if we're wrong, we're wrong. Maybe our ideas are wrong. So fucking be it. We move on. The week is still fresh. Say we get it. Say we lose money early in the week, but maybe at the end of the week, things really start to unfold where we can make better decisions, and we go from there. And it's just insane, man, when you see a lot of these ideas come into fruition, because it gives you the confidence to understand that you're always onto something. And it's just a process of sharpening your skill sets, staying consistent with the way you do things, and just shutting out all the noise and just hyper focusing on the things that really matter. And that's just real. It's all going to come down to you. It always comes down to the individual trader. Nothing about what we teach is overly complex. Yes, there are a lot of sophisticated elements that make up the foundations of our method, but we've simplified it enough to the extent where I truly believe this is something you could teach to somebody. Like it really is. So yeah, I think the last thing I just want to close with is, because I know that you kind of wonder what the accumulation zones look like, man, or what function that they serve, but they generally look like this, man. The markets will have an extensive move. Then there's this inefficiency in price. It's just not really going anywhere. It's putting in some lows. And then you get a fake out, a breach of those lows, and you get an immediate break back inside the level. And then all of a sudden, this is where the break of structure comes in. You get that break of structure out of the box. Hell, you can make the argument there. 9 times out of 10, it's this pullback that we look for. This is where we start to, and sometimes it doesn't even look like that. Sometimes it'll take another swipe and then it'll move. And then if you miss that, guess what? The market will exhaust itself. And then the same process repeats itself. And then you just look for that confirmed range. And then you look to take moves to the upside direction. Accumulation zones are just a way for big institutions. Maybe something has shifted fundamentally. They start to collect buy orders, and then they shift the market in the other direction once you get this fake out. Because remember, if you want to buy in massive quantities, you need an equal amount of sellers to sell you the same amount of volume. So when they create this fake out, who's stepping in? Breakout traders in the form of sellers. Those are willing sellers. So if there are willing sellers willing to sell them the euro and they want to buy, boom, that's where they're going to do it. And then the market immediately reverses. And then this is where the funny business comes in. Everybody notices that they got fucked. So they start flipping their positions. And then that's why you get those massive swings to the upside, because everybody starts chasing in the other direction. All the while, they're just sitting back and watching their account just make a fuck ton of money in that whole process. So, we might see that here. Take a look. Boom. We're starting to get that slowdown and that inefficiency in price. So if price could present something like this to us, we'll probably take it to the long side. And that's really it, man. If we don't get that, so fucking be it. But if we do, we're going to see how we could play that very well. And we know that sellers are here, so it makes sense. Like we're due for an accumulation zone. And if it doesn't happen, it just might happen somewhere beneath these lows. It's got to happen somewhere, man. It's got to happen fucking somewhere. But as long as we can get a reaction off these support levels. Give me a second. Yeah, as long as we can get a reaction off these support levels and that immediate spring up, we should be golden. We should be golden. And you just keep readjusting your order flow analysis as price unfolds. And that's just the name of the game, man. That is the name of the game.
Can I just ask you something there, Dave? Could you just go to the daily, please, a minute? I just want to ask you, it's to do with this, but it's just slightly off a bit.
Absolutely, man. Let me clean this up. Going to the daily.
No, the weekly. Try the weekly. Okay. I just spread that out a bit. No, I think you want the daily. Sorry.
Okay.
Right, so spread that out a bit.
Oh, this is just too easy, man. Ask your question, brother.
No. Spread it out a bit. Zoom in a bit.
Oh, zoom in a bit. Okay.
Yeah, please. Right. See that cluster on the right after the impulsive move on the right-hand side to the furthest point to the right. That cluster there. Right.
Yes,
So just spread it out a bit more. Zoom in a bit more. Right. So I'm trying to figure out how you're determining, without using fundamentals, how are you determining the fact that price is more likely to go to the upside than it is to go down? So what I'm looking at there is, if you can draw a trend line just across the lows.
Yeah, dude. I got the perfect. I'm about to blow your fucking mind on how simple this shit is, man. Look, trend line. Not to sound cocky or arrogant, right? But trend line. Principles. I'll keep applying the same principles. Fake out, break of structure, impulse move, stop hunt.
Range.
So this gives us an indication. Yeah, confirmed range, impulse, range.
You even had a pullback on that last confirmed range.
Yes, sir. We know that there's buyers here. Buyers, there's a cluster of liquidity here. Give me a second and watch this. When we zoom out, sellers are still fucking profitable from over here. Look at where. This is why we can take advantage of some short-term opportunities. Look at where it's selling off from. Look at that deep-ass excursion. Round number. Let's round number at the 119. Give me 1 second. Okay, there we are. 119. We got that deep-ass excursion. There's a zone. There's a round number. Confluence. There's failure up there. Price is closed below this. So this gives us an idea that we can take a short-term opportunity to the downside. And then, boom, boom, boom. Why do we expect long side? So not only just from a structural standpoint in terms of the things that we checked off from our criteria, but this is so fucking obvious, dude. Every retail trader looking at this is like, oh, this is going to move down. But yeah, sure, they'll make money temporarily. But if they're holding this trade over the long term, we know that there's a cluster of liquidity up there. And this high is long overdue to be flushed out. So let's take a look at the weekly. When you get a fucking strong ass move like this, yeah, I think we got some upside to go, bro. If it's really gonna tank anywhere, it'll probably be up there. I could be wrong, but
that's your logic. That's how you're thinking about it. I get it. I was just trying to work out how you're thinking about the fact that without using fundamentals, what are you seeing in the chart to make you think that? Because you've been on about this for as long as I've been here, is euros going up?
Yeah, man. I've been short the euro for the past 2 years, but given that we've been having this massive, just weird type of volatility, look where it happened as well. March, this is when we started to get the fucking corona come in. That's where the volatility started to amp up. But the euro, it's because the EU is coming out with so much fucking stimulus just to keep the shit afloat. But that house of cards is going to come down eventually, bro. Reason being is because once people ground themselves into reality at the fact that we've had the worst unemployment in fucking decades, in decades, GDP is shit. If we hit another lockdown, if we continue to get some just horrible things come out, the more worse data that comes out, people are not going to be so invested into assets. We're going to get that risk off sentiment because why? What happens when we hit the lockdown? What do you think people are going to do? Do you really think that they're going to give a fuck about investing into the stock market, into Bitcoin, into real estate? By virtue of the fact, when they sell their assets, by denomination, what are they getting in return when they sell their assets? Dollars. There will be that influx of demand for dollars. So the dollar will strengthen, not because it's a good currency pair, but just by virtue of the fact that there will be massive demand when they start to sell their assets. So the euro will weaken, the dollar will gain strength. But keep in mind, now from a supply and demand standpoint, if these institutions wanted to buy massive quantities of dollar at bargain, they would probably do it here. At those highs, at the at the 126, maybe even fucking higher. But I feel like the higher that they can run this before they start to deploy a massive amount of contracts to buy dollar cheap, because by virtue of the fact, if you're selling euros, you're buying dollars, they would probably do it at that high point. And then the process repeats itself. And then maybe somewhere around the end of the year or early 2021, I think that's where things are just going to fucking go to shit, man. And who knows, man? Who knows what's likely to unfold throughout the years? But I know 2020 and 2021, it's going to be a little bit of a bumpy ride, and the volatility is going to be insane. But yes, from a short-term standpoint, just off a technical standpoint, yeah, we could run to the short side. But based off the criteria from our method on a macro standpoint, yeah, we want to look for longs, bro. This is screaming long. We know that sellers were cleaned out here, but I'm not convinced that this is the collapse of the euro, because things are still going okay. The economies are over here in Indiana. We're opening up as normal. We're opening up normal. The stock market keeps putting in record highs. From the negative 35 to 40% drop that we've had, for it to recover, it's just weird times, man. It's just weird times. So I think that there's more upside before the real shitstorm unfolds. That's how I'm assimilating the fundamental information. Because underneath the skin of everything, the data's bad, bro. The data is fucking bad. But the markets are not reflecting that. So if we have bearish news, but price action isn't reflecting that, you need to fucking go long, dude. You need to go long. The problem with the retail space is like everybody's screaming short when price isn't reflecting that. Us as professional traders, we're disregarding the news. Okay, if price isn't reflecting that based off the news, maybe there's something else that we're not paying attention to. So we need to go with the narrative right now. Things are going up. We're going to play with the narrative. That's how we're making money right here. And based off what Chris and I have done over and over again, when something looks so fucking obvious, it's not in your benefit. This short is so obvious. So yes, we could play with that short-term narrative of we've already exploited how we're going to we've already discussed how we're going to exploit short-term opportunities. But I'm not convinced that this is the end of the euro, dude. At least not yet. At least not yet. So we're going to look for some long continuation plays. This is the daily chart. So we at least have an idea of how far we can run this shit. It might even go past the 116, and then we'll look for longs from there. Does any of that make sense of how we just broke all of this down?
Oh yeah, of course it does. Of course it does. Makes sense.
Simple stuff, man.
Yeah.
Simple
Taking
stuff
the
from a
equation, the fundamentals out of the equation, it's kind of new to me, but it's easily seen. I can grasp what you're doing. I can grasp how you're looking at this chart, and I can see how you're determining. You know, your direction is the biggest thing, I think, because I'm grasping the rest of it quite easily and quite slowly, but I'm grasping it. That part, man, there was really kind of confusing me a little bit, but really there's no confusion because you can go either way, you know.
Yeah.
Excuse me. Sorry.
Oh, sorry. All I was going to say is that this is why retail traders have no consistency. This is where they struggle, because you notice how trading is so weird, because not only is it ambiguous, but at the same time, you need to possess the sense of humility, but the sense of supreme confidence to know how to stick to your ideas. From a macro standpoint, we want to long. But from a much more shorter standpoint, we want to short. And traders don't know how to take it. Like, do I long or do I short? What do I do? We're taking advantage of all this shit, man. That's the thing. So we know how to hold into our ideas and how we're going to exploit all of that stuff for money. So yes, we took a look at the daily chart. We know we want to long over the long term. But when we scope in on the 15-minute chart, we can take advantage of short-term opportunities. Just with that, don't confuse yourself. Just play with those narratives that present themselves to you. So man, that's something that Chris and we can't teach nobody, because that's something that you guys are going to have to work on yourselves to really get and understand.
Yeah, but that's a lot clearer now to me, because now I know it's not actually a direction you're looking for. On the 15-minute, you don't really, I mean, it's nice to have that macro view direction kind of thing in your head, the bias that you've worked out in your head off the chart on a bigger time frame. But it's not really necessary to play the manipulation from range to range.
Exactly. And notice how we just did our analysis on the 15 fucking minute chart and why we were looking for a long. And then when we pull up the daily chart, it just fucking confirmed that. You know your ideas are solid when all of this shit is in sync with each other. So yeah, I understand people say do the top-down approach, but at the same time, notice how all of that ended up integrating itself into our macro bias. You see how that makes sense?
Yeah.
Boom, man. Boom. So just to close this up, say we take advantage of that long play. Say we enter somewhere here. You get a nice tight entry. You take profit at the midpoint. If you once you break even, you can look for trades to add to your position. Then you take profit at the highs. Once we start getting those breach of those highs, or we get more trend continuation plays, we just keep adding and milking the fucking euro. That's it, man. That's how you make a fuck ton of money when you're just hyper focused and specialized in a particular pair. That's really it. So I don't care what this does. My question is, how the fuck am I going to take advantage to make money from this? That's my only question. I don't care. I'm not asking like, oh, what's it going to do? I'm asking, how can I make money? Because the money's there, bro. You're seeing the money be made every single day. But you got to figure out how you're going to make the money. And we just did that. We literally just did that. We set our work for the week, month, and months is literally, it's done. We just have to wait for all this shit to elapse. That's it. Yeah, but good stuff, man. Good stuff. Rise, man. I see Rise in the room. How's it going, brother? You doing good? Let's see if he answers.
Good. You?
Good, my man. How are you, brother? Thanks for attending the meeting. You learned anything so far? Anything of use, of value?
Yeah. I've been looking at your stuff for a while anyway, so I've got an hour free, so I thought I'd drop in and hang around in the background.
Awesome, man. Well, we appreciate that. Did any of the stuff that we discussed make sense? Anything you need us to clarify?
No. Like I say, I've been looking at your stuff for a while, so I've got a reasonable grasp on it, just polishing up, really.
Gotcha, man. Gotcha. Cool stuff. But is there anything that you guys want to go over? Anything that you want to cover before we call it a wrap? Because I honestly think this has been a very productive session, in my personal and humble opinion.
Well, I was going to say that, I wouldn't really like to go into another one, because what you've done here is pretty much what I need to learn. As a whole, as I said, I've been taking bits and pieces, but as a whole, that's pretty much what I need to learn. And it seems a lot simpler now, because I'm getting used to the charts and getting used to the method and getting used to understanding your accumulation zones, your distribution zones, your breakup structures, your impulse move, and the fact that it's only a frigging range at the bottom and then a manipulation. You see, I was overcomplicating things, and I'm thinking, fucking breakup structure, impulse move, fucking confirmed range, fucking no follow through, all these things. I'm baffled with it sometimes. But then slowly, as I'm looking at the chart, and then looking at the chart that I've got on my wall, and then confirming the range, confirming the impulse move, confirming the breaker structure, and then realizing that it's just a fucking range, and you just need to go from one end to the other, find your manipulation, find your trap traders, your entry cheese, and move from one side to the other. It's not about, I suppose, it's not about making the long-term trade, which you're going to be in for days and days and days or weeks. It's just about collecting your money, innit?
Yeah, dude, that's it. Just be in, be out, collect your money, because even the problem with trend trade, dude, is that everybody's just trying to catch those massive moves. But the thing is like, why do you want to hold the trade for that long when if you know, or if you have a solid idea of where price is likely to move, why the fuck are you just not taking your trades and locking in your profits and continue to look for those continuation plays? I would much rather make money in a consistent fashion than in one fucking clean ass swing. And that is what we show our guys. And that is what we do is so powerful, because they're able to stick with something when they're getting those instantaneous results. I don't know many traders that could hold a trade for a very long time, man. There's not many people that are wired to do that. So we like to take our profits here and there. And if you have the direction right, opportunities will continue to present themselves in that direction.
Yeah.
Yeah. So yeah, dude, that's literally it's this simple. I hate to sound like a douche sometimes, and because I know trading isn't that simple, but it's that
But
simple.
it is the way you're done it. It is. It is. It
Yeah,
really
man.
is.
But maybe it's just because it just comes from time, man. It comes from time and just
Mm.
really perfecting your craft and just learning the things that you've learned, constantly
Mm.
evolving and perfecting and refining your method. But once you're there, man, it's this stuff is just clockwork. It's just
Yeah.
routine.
A lot of the things that helped me out in the beginning, Cam, was not looking for these examples in live price, because if you look at it live price, you're gonna be trying to like, okay, this is the breaker structure, this is not the breaker structure, is this a range? Maybe that's not a range. Just back test it. Go back and try to find our setups on the price chart in which already happened, and that's the things that helped me out when I started, was looking for all this stuff and just back testing it. So once the price chart is giving you a chance or an opportunity that looks very similar to something you've back tested in the past, then you
You get
kind of have an
onto it.
idea of how it's going to work. Yeah, you get onto it.
Yeah.
So I
Yeah.
recommend stop looking at it too much for live price, because it's going to be tough to find all these things, and that's why maybe it feels like a workload, trying
Mm.
to pinpoint everything that we look for. Just go back and look at examples that worked in the past, and you'd be surprised how many times this happens on every price chart, the 15, the 5, even the 1 minute chart. You've seen that I've traded the 1 minute chart frame,
Yeah.
using
Yeah.
looking for the exact same things.
Yeah. Yeah, that's a good idea. I can picture that already helping, because yeah, once you're imprinting those images in your mind, going back and finding them and printing them, then when they show themselves, it's actually a lot easier to spot them. I can see that, and I think that's the way forward for me now with this.
Yeah, bro.
I have to do some of that back testing.
Little by little, you guys will get there. I have nothing but immense faith and hope